Okay, welcome back to another episode of our little mini M&A series. Today we're going to be talking about information memorandums, or IM. Sometimes they're called offering memorandums. So we're going to be talking about what is an IM, what's included in one, why do you need it, and as always, some key takeaways and best practices. Okay, so let's talk about what is an IM. So an investment memorandum is essentially a very comprehensive document that is prepared before a business sale, or you can actually use it to raise investment. And it provides potential kind of buyers or investors with key details about the company. It'll include pretty obvious stuff like financial statements, market analysis, kind of operational overviews, key market segments, stuff like that. It'll also include things like growth opportunities, risks, but it's designed to serve as a bit of a marketing tool, really, to attract serious bidders. And what's the purpose of it? Well, it's to tell the story. It's to act as a sort of narrative to the business, and really, it's designed to not only attract the right buyer, but also potentially to sort of put off people who aren't right for the business. Not every business is going to be right for every buyer, and as a result, it's important to whittle down to qualified leads as quickly as possible, and the IM kind of does that. A way to protect you and your confidentiality before an NDA is signed. And so, what's its purpose? The purpose really is that it acts as like an initial pitch document in the M&A world. It's normally distributed after an NDA is signed. And so typically what will happen, just to go off tangent for a second, is when a business is listed with a broker, it will be listed with very vague terms. So it might say the kind of overall figures, £2 million turnover with £500,000 EBITDA located in somewhere in Oxfordshire, let's say. And when a buyer's seen that and says, do you know what, that's kind of within my range, in my geographical range and my financial range, send me over more details. What happened then is the buyer will sign an NDA, which means that they can't disclose any information that they read in the IM to the rest of the market, which kind of protects the seller from information being shared that they don't necessarily want to be shared. So what is the relevance of an IM to a seller? Obviously, its main kind of purpose is to attract buyers. It's essentially a marketing tool to highlight the positives and to highlight like future revenue growth or potential for the business. But it does that whilst controlling the information flow to sort of try and eliminate revealing too much sensitive data prematurely to a buyer. It's an efficient use of information, I suppose you could say. It streamlines the sale process by sort of pre-qualifying buyers and setting expectations, which sort of helps reduce wasted time, I guess, further down the line. So like I said earlier, typically you'll only receive an IM if you meet the criteria for that business. So if you're an acquirer looking for a business that turns over £1 million, you're unlikely to be sent an IM for a business that turns over £10 million, for example. And in terms of risk management, it includes disclaimers to limit liabilities for misrepresentations. It's not necessarily a legally binding document, and so you can kind of sleep at night knowing that the information here isn't going to get you into too much trouble. There are challenges with it, of course, as with everything. It does require kind of accurate disclosures to make sure that you're attracting the right people. You don't want to declare things in an IM about how wonderful your business is if it isn't that wonderful. This is one of the first documents that will start a relationship with a buyer. And if you've watched any other videos, you're going to hear me talk about trust and integrity and that kind of stuff. And this document will help kick off the relationship on the right foot. So let's look at it from a buyer's perspective. It provides generally a structured overview for buyers to evaluate the opportunity. Okay, the information might be slightly limited, but you should be able to it should have enough information there for a buyer to kind of qualify themselves really. Is it something they're after, or are there things in here that make you think as a buyer, well, yes, it fits certain criteria, but actually it goes against our core values, or doesn't hit the metric that we're looking for in a in a specific part of your buying checklist. It's useful to sort of identify, I hate the word, but synergies where the two businesses sort of align, and where they could really help each other out. So your your business may really benefit from a piece of IP that the target company has, or you might be in a manufacturing business and looking at a potential target company that has a specific type of machinery that could really improve your overall production. Um, and it just kind of helps you decide on pursuing the lead. It offers kind of like a real high level insight into key metrics and value drivers, and it should really, if it's written well, it should really enable you to make a quick assessment of the sort of quality of fit without having to go through a full due diligence. You kind of look at the IM and will make a decision on the value of the business as a buyer, and you'll sort of say, well, look, this is contingent on meeting due diligence, and the condition of the financials that you've shown us in the IM need to be truthful, which will come out in due diligence. It can help you with financial analysis, market data analysis. You can use it as part of kind of a valuation modeling piece if you have the technology. It's a nice way to kind of spot red flags as well. Dependencies on core customer, or you might be familiar with the business, but the IM might highlight a risk that you didn't quite consider. And it'll also kind of help with, if it's written well, it will also kind of help you work out if it's going to be a good cultural fit for your existing business. Little side note on negotiation here: the gaps or inconsistencies in an IM can often be used to negotiate better terms. So if you are a seller, just be careful of that. There's a lot of use of ChatGPT in some of the IMs we've seen, which can be helpful to sort of fill out some of the more basic stuff, but you do want to make sure that it's written well and in such a way that it's not leaving the seller exposed to anything unnecessary. As always, challenges. Um, Information can be biased towards the positives. At the end of the day, this is written from the narrative of the seller. And as a buyer, you have to be kind of aware that it may be written with rose-tinted glasses, and just kind of go into that with that kind of mindset that you're prepared to assess rather than just accept. And in terms of best practices for this, then, so accuracy and transparency. Again, we're coming back to good communication, which is the theme of these webinars. This is the kind of teaser document that will start the relationship with the buyer, and as a result, accuracy and transparency should be at the top of your mind when writing an IM. It is pointless to draft an IM which is factually untrue, which contains information that doesn't apply to the business being sold. We've seen it multiple times before. It is everywhere, but it's any lawyer worth their salt is going to pick this up in due diligence, and it just sets the wrong tone for the rest of the relationship. Tailored content. So it's a good way to sort of customize the IM to highlight the business's unique value prop if it's got one. It will also highlight things like growth potential and market position. And it can, show things like potential ROI, or again, synergies, as we alluded to earlier. I think for us, we like to tailor IMs to specific buyers. So there won't just be one type of IM that we'll produce. It will be, drafted on a specific buyer, whether that's a trade buyer or an external industry buyer. Sometimes we'll even adjust those for a very specific buyer once they've asked for it. It's important to be comprehensive, but you do not want an IM that is pages and pages and pages long. Again, this is supposed to be a teaser document, and it's supposed to be compacted and condensed down to the kind of salient points. It needs to tell the story again and the narration that you're looking for, but it can't go off on tangents and give information that isn't relevant. This is a kind of tough one because you have to kind of balance brevity with information. Um, it should be enough for a buyer to get a good feel for the company and to be able to put an offer in or a sort of offer range dependent on certain metrics being met with a level of comfort. Again, worth repeating, confidentiality, share an IM only after an NDA has been signed, and certainly limit sensitive data within it. So, for example, you do not want to put your top 10 customers within this, or perhaps include their spend but hide their name. Customer A, 50 grand a month, whatever it might be. Do not specifically label them within this document. And then best practice for sellers, it's worth spending the right money on this kind of thing. Some companies draft these for free. We tend to use professional advisors where we can, specifically uh, using a professional copywriter. As I said earlier, AI is great; it can do some things, but it's important to spend the time with the seller of a business, getting to know them, getting to understand what they're looking for, getting to understand the business as well as possible. Spend some time in the business, looking at the processes and the people and how it sort of moves. And again, spend some time with the accountants of the business if the business doesn't have any internal financial people that can share that information. Quite often, a business owner will be looking to sell or sort of exploring the options to sell and might not necessarily want that declared to the rest of the team. So they'll have to rely on external advisors to help them through that before they release that information to the team. So we spend a lot of time with businesses, accountants, just going back and forth on figures and checking things before they're included in the IM. And then in terms of sort of best practice for buyers, another one for a seller is to sort of design the IM to anticipate buyer questions. Um, you want to provide enough data to spark the interest, but uh, it encourages um, further engagement. And then best practice for the buyer really is look at the information and try and pre-qualify the business as its suitability to you. Um, if you're on an acquisition journey, you will spend a lot of time deep in the weeds of IMs, and it's important to kind of understand how they flow and be able to discredit them quickly if it's not for you, so you're not wasting time. And also, don't put too much hope onto an IM. It depends who it's written by as to how well it might be written, but you may find that when you get further into due diligence, that things in the IM aren't what they appeared to be. And so we advise our acquisition clients to really think about kind of a core set of questions around the content of an IM, and to ask those before going any further or before sort of heads of terms or offers are submitted, because again, you don't want to be starting to pay lawyers' fees to find information out that isn't true in the IM. So if there's anything in the IM that you're really sort of relying on to make an acquisition, be it a specific product type or a certain amount of turnover or whatever, just try and verify that before you go too much further down, NDA dependent, because you want to make sure that you're using your time well. Okay, guys, that's it for this webinar. Thanks again for watching. As always, if you've got any questions, please reach out, info@theexitadvisor.co.uk, drop me a message on LinkedIn, pick up the phone, whatever it might be. Thanks very much again, and we will see you on the next one.